So, good evening, colleagues. Today we want to talk about the group cash flow as usual. But this time around, we want to focus on the indirect method. Yesterday we focused on the direct method, and I said the only difference from this approach and yesterday approach is that of the operating activities. The way I'm going to calculate my operating activities using direct approach is quite different from the way I'm going to calculate operating activities using indirect approach. But other headings like investing, financing, both direct approach and indirect approach is the same way. It is only operating activities that it differ. If you can recall, yesterday I said if you want to do operating activities under direct approach, you focus on what is called SCEP. That is, you focus on the amount that you pay to your supplier. S represents supplier. You also focus on the amount that you receive from your customer. C represents customer. You focus the amount that you pay to your employee. E represents employee. And you also focus on what? The other expenses that you paid. That is what I'm putting P. The other expenses paid. So if you are calculating for your what? Operating activities under direct method. Operating activities under direct method. But this time around, I want to focus on indirect. And this indirect method, you don't need all these 4 acronyms that I put down. You don't need them. What you need under indirect approach is that the profit before tax, profit before tax, profit before tax, profit before tax. That is what you need. That is what you need under your what? Indirect method while calculating for operating activities. You need profit before tax. So you now go to your question, where will you see profit before tax? You can only see profit before tax in your income statement. We call it statement of profit or loss. That's where you will see your what? Your profit before tax. Your profit before tax. Are we there? Hello, are we there? Hello.
Yes, sir. We are here, sir.
So profit before tax.
Aye, sir.
Profit before tax. So that is what that is where you will see your profit before tax, which is we can say operating profit. Now, if you look at Odunola, ask your question. You raise your hand. You raise your hand. Ask your question. Hello. It's too early to raise hand, okay? Because we've not started anything. So now, if I open my question, then I will just trace the income statement. Look at this number 3. We are told that the following is the extract of group income statement for the year ended 31st December. They now give us 2017 and 2018. Then what I'm going to look for is my what? My profit, operating profit or profit before tax. You can see this is the profit, operating profit before tax, because this is the taxation. You can see operating profit before tax. Then you just pick this 2018 as our closing balance, Then you come by putting the name of the company. And what's the name of the company is all about? ACCA Nigeria Limited. Then just write the ACCA group, because we are working with group. ACCA group. Then you write statement statement, cash flow for the year ended. So what is the year? December 31st, 2018. So this is the heading. So if you do this, then you are good to go, because this one is also a chart mark. Then you just start with operating activity. That's the heading. Operating activities. Operating activities. Then you start with profit before tax. You can write it in full, or you call it operating profit or profit before tax. Profit before tax. So when you put the profit before tax, just take the figure from your question. So how much is that? 2,125,000. 2,125,000. So are we there? Hello?
Yes, sir.
Okay.
Yes.
Okay, good. So after that, the another thing that you are going to do under this indirect approach is that you have to add back the item that is not involved the movement of cash. You have to add back the item that is not involved the movement of cash. So such item that you are adding back are those items that in your P or L, that is in your statement of profit or loss, those items that you deducted before you arrive at your profit, like the expenses that you deducted before you arrive at your profit, you have to add it back. The income that you had to your profit, you have to deduct those ones. So that is what I mean by adding back the item that is not involved the movement of cash. Number one example of the item that is not involved the movement of cash, add item not involved, add item not involved movement of cash. Item not involved the movement of cash, such as depreciation. Depreciation is an expenses and is not involved the movement of cash. Don't forget that in your P or L, depreciation, it is what? Depreciation, it is an expense. You've already deduct depreciation while calculating your P or L in order to arrive at your profit, because depreciation is an expenses. Then if you want to do the cash flow statement, you have to do what? You have to add it back. You have to add the expenses that you deducted before you get your P or L, such as what? Depreciation. You now go to your question and look for what? Depreciation. Look at what's it called? Note 2 here. We have depreciation for freehold plant and machinery, but total of that depreciation we have 104,250. 104,250. 104,250. So you have to add it back, because before we can arrive at profit, depreciation for accounting purpose, we have to deduct depreciation because it's part of our expenses. We are deducting depreciation as expenses before we get our profit. Then if you are doing your cash flow, you have to add it back. Are we there? Are we getting it?
Yes.
Okay. So another thing that we also need to think of is that if there is a profit, then assuming you dispose your assets and you realize a profit on your disposal. Take note of that. Your asset and you realize a profit on your disposal. For instance, if my asset worth 4 million and I dispose that asset 4.5 million, what is my profit on disposal? My profit on disposal is 500,000. So this 500,000, you have to subtract it. It's part of the item that's not involve the movement of cash. You have to you don't need to add that one. You just say profit on disposal of assets, then you put the figure and put bracket. Because profit initially in your statement of profit or loss, profit, we don't need to deduct profit because it's not an expense. We have to add it. If you make profit on your disposal of assets, you have to add it to your gross profit because it's part of your other income. So all the income that you had in your POL, when you are doing your cash flow, you have to subtract that one. It's just the opposite of the expenses that I mentioned. Like utilization is not involved the movement of cash. Depreciation is not involved the movement of cash. Then depreciation is not involved the movement of cash. So as a result of that, you have to add it back. But if it is profit, then we deduct that profit. Like the example that I gave, profit on disposal. That's the example that I gave. So that is the number one. Another thing that we also think of is that if there is a goodwill written off, let's assume there is a goodwill written off, we have to add it back. Because when you are writing off a goodwill, automatically you are expensing it. Then, if you want to do the cash, you have to add it back because it's not involved the movement of cash. Another thing that we can also think of is that if there is a loss on disposal of assets, let's assume you make a loss on disposal of assets. You know, in your statement of profit or loss, what is the treatment of loss? Who is that person? That person should move. The treatment of loss in your statement of profit or loss. Loss is an expenses. We have to do what we have to expense it. Are you getting it? We have to expense that loss in your statement of profit or loss. And when I say expense the loss, it means that we are deducting it before we get our profit. You know, when you make loss is an expenses. You deduct it. Then if you are doing your cash flow, you have to add it back. Because as an expense, you've already deducted it in your statement of P or L. Then when you are doing your cash flow, you have to add it back. Are you getting it? Can we continue?
Yes.
Hello?
Let's continue. We can
Okay.
continue.
Okay. Another thing that we can also think of in case if the dimension of the question change, another thing that we can also think of is that if there is a share of associate company profit, let's assume there is a associate share of profit. So this associate share of profit, I told you that because of profit, in your statement of profit or loss, profit will be added. Then if you are doing your cash flow, you have to subtract it. Do you get it? It's opposite of expense. It is opposite of expense. It is the opposite of expense. So you have to do what? You have to what's it called? You have to subtract the share of what? Associate company profit. So everything that I mentioned, we now go to our question and check it whether we have it or not. we can see depreciation, and we've already picked the depreciation. Then we check what is it called? We check other things if probably we have it, but if you don't have it, no cause of alarm, then we do what? We move on. Are we there? Hello?
Yes, sir.
Can we move on? Can we move on? Because I want to carry everybody along so that I will know if you can hear me. So let me know.
We can move on.
Okay. So after that, we now say, okay, since we don't have any other information regarding to that, then we can now say we want to calculate the what's it called, movement of working capital. Movement of working capital. So that's where we can now say we want to calculate the movement of what? Working capital. So the movement, we can add this. Who can help us? Let's add this one first. Please, somebody should help us to cast this. Who will help us to cast this?
$22,000,000. 2,229,000. Sorry, 2,229,250.
Okay. 250. Okay. Then after that, we can now move to what is called movement. Movement of working capital. This movement of working capital, I want you to take note of this. When we say movement of working capital in our cash flow statement, what we are referring to is your current asset and the current liability. Current asset and current liability as is our movement of working capital. Is our movement of working capital. But you have to take exception. You have to take exception of the following. Under your current assets, cash and bank, cash and bank are not included when you are doing your movement of working capital. Cash and bank are not what? Included when you are doing your what? Working capital. And also short-term investment, short-term investment or short-term instrument, short-term instrument, short-term instrument, short-term instrument, short-term instrument, they are not included. They are not included. It means that if I want to do my working capital under my current asset, I will ignore cash and bank and short-term instrument. Under current liability, I will ignore what is called bank overdraft. Bank overdraft, bank overdraft. It means that when I'm doing my movement of working capital, this cash at bank, short-term instrument, and bank overdraft will not be what? Included. Will not be included. Will not be included when I'm doing my movement of working capital. So let's go on. So if I didn't consider all this, automatically the rest I have to consider them. So under my current asset, where will I see current assets? I'll just go to the question and check my statement of what? Financial position. That's where you will see your what? Your current assets. Formerly our what? Balance sheet. Balance sheet. Balance sheet. That's where you see your what? Your what's it called? Your current asset. So you can see it, you can see consolidated statement of what? Financial position. That's where you see your current asset. Then locate your current asset. Where's the current asset? Can you see? Current
Up.
asset. Current assets. Have you seen? Okay, current asset. Current asset. So it means that I have to do movement of inventories. I have to do movement of receivable, but I will not do movement for cash because I said it's not going to be part of it. It's not going to be part of it. Are we good to go? Hello?
Aye.
Should we move on?
Yes, sir.
Okay. So then I come here and say inventory. Inventories. Then these inventories, we have 2017 as opening balance, then 2018 as closing balance. So you have to do working for it. Just look for a way. Let me do it some way and I will be cleaning it. Inventory account. Inventories account. So this inventory account, you draw your T format like this because inventory is an asset. Inventory is an asset. Take note of that. Inventory is an asset. An asset always have a debit balance. Then we have balance brought forward. Balance brought, because it's an asset, you always have a debit balance. Balance brought forward. Then let's go to the inventory. Balance brought forward simply means the opening balance. How much? 1,230,000. 1,230,000. Then I will now come here and say balance carry down. Balance carry down. The same inventory, balance carry down. Balance carry down. How much is that? For 2018, 1,465,000. 1,465,000. 1,465,000. Then you now go to your question. Check it very well. Is there any information regarding to subsidiary? You have to take note of that. Is there any information regarding to subsidiary? If there is information regarding to subsidiary, then you have to consider that one. Let's check. Look at the information one. During the year, the holding company acquire wholly owned subsidiary Ibokun Odowa Nigeria Limited. So this is the information of the holding company. Holding company is the parent company. He now acquire the subsidiary. Look at the information of the subsidiary acquire. Look at the net asset. There's inventory there. How much is the inventory? I want to know. Maybe you are following. One person should tell me the value of inventory in this information of the subsidiary, because this subsidiary
175,000.
parent. So what is the inventory that we have here?
175,000.
175,000.
70
175,000.
175. So that 175,000, 175, that is a subsidiary acquisition. You can say subsidiary so that you don't waste your space. 175,000. 175,000. Then you now add. You add, then you subtract so that we look for the difference. You add this side and let's see which one is the highest and which one is the lowest. Figure me, please. Figure me, please. Hello?
1,405,000.
For debit side.
Yes, for debit side.
That much.
$1,405,000.
I say which one is higher?
The
Credit side is higher.
That's what I'm
Credit side
asking.
is
Then
higher
I
than
can
the
I
debit
can
side.
put the value of credit side as total first.
Yes, they
1
will put
million first
600 in the debit side.
to make it balance.
Yes,
So
60,000.
600. Okay,
60,000.
60,000 as balancing figure.
Yes.
Balancing figure. So let me now interpret this. When you check your credit side from here, let me interpret it for us to get it clearly. Where is that inventory? Current asset. Your credit side, which is the closing balance, 1,465,000. Abi, then the opening balance. It means that opening balance is lower than closing balance, right?
Yes.
Now, what does that mean? It means that there is increase or decrease? Because
There is increase.
our closing balance, we have 1,465,000, but our opening balance is not up to that. It means that there is increase in what?
In
There is increase
inventory.
in what? There is increase in inventory. Are we all getting it? Or you need more explanation?
We are okay.
Your closing balance is showing 1,465,000, while your opening balance is not up to that. It means that there is increase in what? Inventory. By how much? By 600,000. Then you now come here and put it there and say increase. And say increase in inventory by 600,000. Now put 600,000. I mean,
It's
how much do you
60,
call
not
it?
600.
60,000. 60,000. Because, but the rule now, the rule that we want to take now is that since your inventory is increasing, it means that you are pumping more money to procure more inventory. It means that your money is going out. You have to put it in brackets. Because as your inventory increases, it shows that you are pumping money to procure more inventory. And the money that you are using to procure that inventory, the money is going out of the business. That's why we are putting it in bracket. But let's assume our inventory decreases. Let's assume it decreases. It means that we don't need to put bracket. You don't need to put bracket. Hope it's clear.
It's
Hope
clear.
it's clear. Okay. Then we can now move to another one, which is the receivables. Receivables. You do the same thing to receivable as well. You do the same thing to what? To receivable as well. You do the same thing to what? To receivable as well. Let me clean this place. You do the same thing to what? To receivable as well. You just do the receivable account. Receivable account. Then, because it's an asset, I said asset always have a what? A debit balance.
Debit balance.
That is balance brought forward. How much is the receivable opening balance? 410. 410,000. Then balance carried down. How much is the balance carried down? Which is 2018.
767,500.
767. 767,500. Then we can now check whether we have information for it under this acquisition of that subsidiary. You can see receivable and prepayment. How much is that?
Good one, sir.
How much is that?
212,500.
Okay, 212,500. That is subsidiary. 212,500. Then you do the same thing the way we treated the inventory, add it together, and let's see the one that is higher and the one that is lower, whether it is increase or decrease. Which one is higher?
The balance carried down is higher. And the
Which one
difference
is the higher?
is the credit side is higher.
Side is higher.
Okay, 7. So we can write the one that is higher first.
Yes.
767,500. Then look for the difference.
The difference
What
is
is the difference?
135,000.
So that is our balancing figure.
145. 145,000.
145,000 as our balancing figure. So what can we call this 145,000? Is it increase or decrease? Is it increase or decrease? Hello, is it increase or decrease? Okay, no problem. What this one implied is this. Your receivables in 2017 as your opening balance is not up to your receivable. No, it's lower. Your receivable in 2017 is lower than receivable in 2018. It means that the people that is owing you in 2017, it is the the amount that they are owing you in 2017 is lower than the amount owing you in 2018. It means that you've already sold more. Do you get it now? That is the implication that, oh, if I'm owing you 1 naira in 2017 and 2018, that 1 naira now turned to 2 naira. It means that there's more sales. You are selling on credit again. As you are selling on credit, your money is going out. Are you getting it? So then we say it is what? Increase in receivables. Hope is clear. Hello. Hello.
It's clear, IB. It's clear, IB. Let's move on.
So how much is that?
One 45,000.
145,000. You have to put it in brackets because our money is still outside. Then, apart from the current asset, we don't have any other thing because I said cash will not be part of it. Then we now move to current liability. And I said the current liability that we have here, we have account payable, account payable, account payable, account payable. So you can say payable, payable, payables. So as a result of that, we have to do calculation for what's it called? Payable as well. So you draw the ledger, say payable account. Payable account. Because payable is a liability, and liability always have a credit balance. It's not an asset. Payable is a liability. Always have a credit balance. So balance brought forward. So what's the balance brought forward of payable? 2017, 552, 500. $552, 500. Then balance carried down. Balance carried down, which is 2018, 740,000. 740,000. Then we go to our information for subsidiary, whether we have information of payable. You can see payable is how much?
12,500.
75,000.
75,000. Okay, 75,000. That is a subsidiary. 75,000. Then you add and subtract and check whether it is increase or decrease in payable. So check your opening balance, compare with closing balance. Is it
The
increase or
difference is
decrease?
112, 500.
Is that what?
11 to 500.
Okay, which one is the highest? Which one is higher value?
The balance carried down is higher. The debit side is higher.
Is higher, meaning the closing balance, which is 2018. Then
Yes.
balancing figure. Balancing figure is how much? What do you call it?
112, 500.
112, 500.
500.
So what this implies is that your closing balance is 740. That is, payable are those that you are owing. Your company is owing them. In 2018, your company is owing 740. Whereas in 2017, it is not up to that. Automatically, there's increase in owing by 112. Your company is owing people outside there. 112 has increased. Because before it's not up to that. But in 2018, it's now increased. So increase in payable. Increase in payable 100 and what do you call it? 112, 500. So as a result of this, we don't need to put it in bracket because you are owing them. It means that you borrow more money, and that money that you borrow is actually you bring it to your business. You know, the money came in. Do you get my point now? So you don't need to put it in bracket because you borrow more money to the business, not that money is going out. You get that? Because what you have in 2017 is low compared to 2018. In 2018, the money increased. It means that you borrow more money. But let's assume in 2018, the money reduced. It means that you pay out of the one that you borrowed before. That one is going out. Then you can bracket. But this time around, in 2017, is small. While in 2018, is now increased. It means that you bring more money to the business. So we don't need to bracket it. Are we there? So then, since we don't have accrued any other, so all this dividend, taxation is a separate heading that we need to calculate. You don't need to do the movement now. Then we don't have any other current liability again. Then we can cast. One person should cast this for us. People should cast for us, please. I'm waiting.
2,136,750.
2,000,000
136,750.
2,000,000
136,750.
I'm coming up. 2,000,000 136
750.
750.
You wrote 9. Oh.
Hey, sorry. 750. Then we can now move to taxation. Taxation. That is the tax paid. The tax that we paid. So then that one also, let me remove this one. Then we can now do the working for tax account. You can say taxation account. Taxation account. So because it's a liability, then it always show a credit balance. That's a balance brought forward. But it's a liability, it show a credit balance. Then you look at your question, then bring it out from the question. Taxation. What is the opening balance of taxation? You see it in your balance sheet. What's the opening balance in taxation? You see it in your 900,000. Then closing balance, which is a balance carried down. How much is the closing balance?
950. 950,000.
950,000. Are we all following?
Yeah.
Okay, good. 950,000. $950,000. Then we can now go to our subsidiary if there is information regarding to what subsidiary. But if there is no information regarding to subsidiary, no problem. Then we now go to our P or L. Let's see the subsidiary first. So no taxation. Then let's go to our P or L, which is the statement of profit or loss. You can see income statement. You now go to taxation. So what is the taxation there in 2018? You can see group. What is the taxation of that group in 2018? How much is that? 950. Then you can now come here and say P or L. P or L, that is profit or loss. It means that the taxation that you have in that place. Taxation that you have in that place. That's what I mean by P or L. 950. Then you add and cast. You add it, then look for the difference, then to know how much is the tax paid. What's the total, please, for this side and this side?
1,850,000.
1,850,000. Then if you look for the difference will now be tax paid. Tax paid. So this is the tax they pay. So what's going to be the difference?
900.
900. So this is the tax they paid. 900. This is the tax they pay. So then you now come to your account here and put it there. 900. Tax paid. Because you pay the tax, you have to put it in bracket. Then you now subtract it. So when you subtract, what do you have?
1,236,750.
So is it positive answer?
Yes.
Yeah, if it is positive, you say net cash inflow from operating activities. But if it is negative answer, I say what? Net cash outflow. So we now put it here under the second column, that naira sign. That is the main reason I put it there. How much do you call it? Once again, you say 1,000,000.
1,236,750.
So this is your final under operating activities. Then you now move to another heading called investing. Investing activities. This is another heading called what? Investing activities. Investing activities. And I explained this yesterday that investing activities is usually what you invest. You can invest as a result of probably you acquire intangible assets, or you acquire a shares, or probably you dispose your asset and the proceed. I'm not talking of profit now. When you dispose asset, the proceed that you see, what I mean by proceed is that if you dispose your asset 40 million and they pay you the 40 million, so that's the meaning of the proceed. Then it's part of your investing activities. Then if there is something called dividend received, because if you invest by way of acquiring shares, you are entitled to do or to collect dividend received. Then the form part of your investing activities. I explained that one yesterday as well. Then interest received. Probably you invest your money maybe in GTB, and the GTB promise you that you'll be collecting interest for the money invested, or for the deposit that you made. It means that maybe you fix your money so that you can get interest. Then it means that you invest your money as well. Then the interest received will also form part of your investing activities. Is it clear?
Yes.
If it is clear, then we now go to our question and check everything that I just mentioned, whether we are going to see it there. I mentioned purchase of intangible assets. Then we think of, okay, let's go and look for our tangible assets if probably we are going to see it. Then if you are not going to see it, we move. Not that always that you must get everything that I mentioned. So where can you get your tangible assets? You can see note 2. We have freehold property, plant and machinery. So these are the tangible assets. Then we can now do the working, and let's see whether we truly what's it called? Whether we truly paid for acquisition of a new asset. Are we good to go?
Yes, we are.
Yes.
Okay. Okay, good. And let's see the balance sheet. Balance sheet as well. There is tangible assets. So we have all the information that we are going to use to compute for our whether there is a purchase of what? Purchase of a tangible asset. So let me clean this one. So that I can have where to. So you can say movement of PPE or schedule of PPE, any English that you like. Movement of what? PPE. P, P, and E. Property, plant, and equipment.
You're not
Always
seeing it. It's still on.
others confirm so that I will know whether.
We see it is a network.
Okay, good. So maybe you can adjust your network. You can log out and log in again. So because of PP is an asset, and if you remember, I said asset always have a what? A debit balance, which is balance brought forward. So then you check it, you can see tangible asset 2018. In 2017 is our opening balance 1605 is 01 500 1601 500. Then balance carried down. Balance carried down. What's the balance carried down? 2672250. 2672250. Then we are done with that. Then we move to another information that we have here. We have additional assets, we have revaluation, and we also have depreciation. So what is the additional asset that the company procure? Freehold property, plant and machinery, and the total. The total is how much? The additional asset.
1,601,500.
Okay, that's the additional asset. Then we have what again? We have revaluation.
Valuation.
There's a revaluation. So it means that the company revalue the asset, then we can come up and say revaluation. Evaluation. How much is the revaluation?
550,000.
550,000. Are we following, please?
Yes.
It's only ladies that is answer me. Oh. That's the revaluation. Then let's check the subsidiary information. Subsidiary information. What is the subsidiary information there? Subsidiary, whether we have information on that subsidiary, because I say you'll be checking them. And see, tangible assets, subsidiary information, subsidiary. How much is that?
350.
350. $350. Then there's a depreciation. Depreciation of how much?
25,000.
How for 250?
One word.
104, 250.
250. Depreciation. Depreciation. 104, 250. Then we can cast. We can cast it and subtract. So the remaining balance is actually what's it called? The amount that we paid for the new assets acquired.
The remaining balance is 275,000.
So which one is the highest? Which one is the lowest?
The credit side is the highest.
How much is that?
2,672,500.
2 million.
Alaikum salam.
2 million
672,500.
672.
672.
I got 2,776,500 though.
Yes, 2,776,500.
Depreciation plus the balance brought down could give us 2,776,500.
Yes.
Alima, check your figure.
500. So when you now subtract this, what do you have? That is what do you have as balance? So the balance will now be payment for the acquisition of acquisition of tangible asset. Payment for acquisition of tangible assets. Acquisition of tangible.
So we have the difference is 275,000.
275,000. This is the payment for tangible asset.
Babe, I was not taking that.
So this payment for tangible asset is what you will now take to your cash flow under your investing activities. You can see now that's the payment for purchase of tangible assets. Payment for purchase of tangible assets. 275,000. So you have to put it in bracket because the money is what is going out. Hope it's clear.
It is.
Then what other thing that I mentioned when I'm explaining investing activities? I mentioned whether if there's a dividend received or if there is a acquisition of what? Of shares.
Please, can you take it up a little? Hi, sir. Okay, thank you.
Are we there? Shall I move on?
Please do.
Okay. So another thing that we also need to think of is what I explained, that if there is a what, if there is a dividend received, if there is dividend received, then we check our question: is there a dividend received from associates? Because there's difference between dividend paid and dividend received. So we check if there's a dividend received. You can also be checking from there. So dividend received is part of your investing activities.
There's no dividend received.
No dividend received.
Mm-mm.
Let's check properly.
There's none.
No, if the examiner didn't put dividend received, how will you know there is no dividend received?
Nothing's related to dividends now.
Okay. So now let's
Yes,
see.
mm.
We say from I say from associates. From associates. So if they didn't put the dividend received, it doesn't mean that there's no dividend received. It can be inflow from associates. You know, it's what you collect from associates. It can be inflow from associates. Like you can see this one now. Profit from associate company is part of it. Are you getting it now? So profit from associate company is part of it. And oh God. So that we have to be sure, even though double sure before. Okay. You can see investment in associate company. Investment in associate company. Can you see up here?
Is investment dividends? Top.
Investment in associate company. So at the end of the day, whatever you are going to get from investing in associate company, what is your return? What is your return? Hello?
Dividend.
Dividend
Yeah, but
is
what
your return.
this is saying investments in
Okay, go
associates. So
ahead.
it's looking like, from my understanding, when you say investment, it's just like what you put in, is not talking about what is the return of it. So I don't know, just saying.
That's why I said, when I explained the last time, I said if you invest your money, probably you acquire a share, your return is dividend received. Then if I want to calculate the dividend received, it has to come from where I invest in. Do you get my point now? So if I want to calculate the dividend paid, I have to check it from the angle of my retained earnings. Are you getting it?
Okay.
Hello?
Yeah, I'm with you.
Are we all clear with that? No answer.
The thing is still called, but let's continue.
No, I want to calculate dividend received. Dividend received. And I said the dividend received is actually, I will receive that dividend based on what I invest.
Yeah.
That is why you need the information regarding to that.
Okay, whatever you receive, yeah, nice. Correct. If you do not invest, you cannot receive. So if
You
there's
can't
an
receive that
investment, there
dividend.
will definitely be a return if there is a profit.
Yes,
Yeah, I get you.
yes.
Thanks.
So, and this dividend received, because it serves as an income. This dividend received serve as an income, and income always have a credit balance. Like expenses, we have a debit balance, but income, we have what? A credit balance. Then I will have balance brought forward. Then investment in associate, my opening balance is 515,000. My closing balance, which is balance carried down, is was 612,500. Then, aside from that, we move again from associate. Let's see, we have profit from associate
Profit from
company.
associate company.
How much is that? 300.
300.
300. That's a profit from associate company. Profit from associate company, 300,000.
Yes,
Are
we
we all
are.
there? Because I'm hearing only Justina voice. Oh,
Hi.
hello. I said I'm hearing only Justina voice.
We are here.
Okay,
We are
good.
here. We are here.
Then after that, we go to taxation from associate. You can see there's taxation for associate. How much is that? Taxation, which is an associate. How much is that? 125. 125,000. Then let's see again. What other things that relate with associate that you have there?
But I didn't get that 125. Where did you get that taxation from associate? I'm sorry.
You can see taxation. So we
Mm,
have for group and we have for associate.
okay, thank you.
So then we can cast and look for the difference. Others, are we following?
to what is it again?
6 months,
It
500.
seems it's only one person that is talking.
So the difference should be
And what is the
three to
total cost?
okay.
The
The
total
total
is
is nine
940,000
forty thousand.
This side
The
at the
Credit side,
credit side
credit side,
is what?
nine forty
940,000.
thousand.
940,000.
940, 940,000.
Yeah.
940,000. Then the difference
Three
227,500.
327,500.
is the balancing figure. How much do you call it?
327,500.
327,500.
Yeah.
Others, please help to confirm.
It's okay.
Oh, so you have to recalculate this. Sorry. Taxation. We have to jacket taxation. Hello.
Hi, yeah.
I said we have to jacket taxation, and you guys say don't even. How will you add taxation now?
We are not sure now. We're just following our teacher.
No, taxation. Even though if you remember, I work taxation. That taxation is to deduct now because you pay the tax.
So the figure is 690,000.
690,000.
Yeah.
Then what's the balancing figure?
The difference is 7,500.
7,000.
500.
Oh. So then you now come to your. So this balancing figure is what you need. So you now come to your cash flow here and say dividend received from associates company. 77,500. So you don't need to put it in bracket because you receive the dividend from associate company. Is it clear?
How about if it is dividend paid?
If it is dividend paid, it's not going to be under investing. It will be under financing.
Okay.
Are we good to go?
Good to go, good to go, good to go.
Can we see the dividend received there? This thing.
Is that what? One person is making reference. What do you say? Hello?
Hello, sir. I can't see the dividend received journal, that one that will pass now. There's a changes there. I didn't get it. That's what I'm trying to see.
It's
Okay.
only taxation that we had it now. Instead, because taxation you have to deduct.
All right, sir.
Are we tired?
Hello, Awa.
Do you want us to respond?
If you are tired, tell me now.
I be let's
Tired.
finish up.
Continue,
Next
I
Saturday
do.
is
Let's
the
continue. I
not
beg.
too.
So maybe I will understand. If you are
Ivy,
tired,
let's
maybe
finish it. See, all this
okay,
small time they go. Let's finish this one.
okay. Thank you, guys. I know you will know the tire. So one person raised and let me see. Mutunrayo, you can ask your question, no problem. You can ask your question. One person raised hand now. Madam Mutunrayo, ask your question.
She didn't raise hand. She only put a chat that we are
Okay.
not tired. Let's continue. She just pasted the chat.
Okay, good. So apart from what I what's it called? What I mentioned here, what other thing that I mentioned, I said it is possible for you to say you acquire what's it called?
Acquire new share.
Acquire new shares or acquisition of shares in subsidiary. You know, it's possible that you acquire a shares in subsidiary, then you also factor that one in. So that's what we also need to look at. If there is a acquisition of shares in subsidiary, we also need to do what? To factor those one in as well as part of our investing activities. Then let's quickly run through it and let's see if probably there's what? There's a acquisition of what? Of the shares in a subsidiary. So are we there?
Yeah.
So acquisition, look at the information Roman figure number 1. They said during the year, the holding company acquire whole own subsidiary, and we have purchase consideration, and that purchase consideration was broken down into two: 400,000 one ordinary share of 800,000 cash, 50,000. It means that when you acquire it, you pay what's it called? You pay
400,000 for
yes,
200.
yeah, you pay 50. You pay cash of 50,000. That's what implies. Hello,
Hi, we are not
you
clear.
pay
Take it again.
This is not broken.
purchase consideration because when you acquire the subsidiary, because I told you that it's part of our investing activities, it is when there's acquisition of shares in subsidiary. Then here we can see that there is something like that because during the year, the holding company acquire all own subsidiary. You get my point? And the purchase consideration given to you was broken down into two: 400,000 one naira ordinary share. That one is the 800, and the cash 50,000. What they are saying is that the purchase consideration that is involved in this acquisition is both through the number of shares and also through the cash payment. And there's a cash payment of what? 50,000. That's what I'm telling you here. Is it clear now?
Yeah.
So cash payment of 50,000. Then we look again and check, look at this here, net asset acquire. So the net asset acquire, there's also cash of what? 12,500.
500.
So it means that when you pay a purchase consideration of 50,000, then there's a net asset of what? 12,500. So you have to deduct this 12,500 from this 50,000. Because this is the net asset acquired. You acquire because you pay purchase consideration of 50,000, but at the end of the day, when you acquire the net asset, you also acquire cash along your acquisition. Then it means that if you pay 50,000 to acquire the business, and then when you now acquire the business property, like you acquire the asset, you acquire the goodwill, inventory, receivables, payables, because you acquire receivable, you also acquire its liability. It means that you also acquire cash, and you've already paid 50,000 to buy the business. Do you get my point? Based on the cash, you pay cash of 50,000, but you also acquire 12,500 cash. Automatically, what you pay is not up to 50,000 again.
50,000 is less 50. Yeah.
Are you getting it? Because I think the logic I just explained now is easy to understand. Is it clear now?
It is. Now me will not
Okay.
forget for exam.
No, you can't forget now.
What
Even
is
now,
that? Though? That one is logical.
you said what?
I say it's a little bit logical.
It's not logical, because suppose now, let me give you simple scenario. If you want to acquire maybe by the time you acquire your husband, let me use your husband, that is your husband that acquire you, because it's your husband that pay your dowry. So when your husband acquire you, he pay dowry of 50,000. Then he now say, oh, if I'm acquiring you and pay dowry of 50,000, I will acquire everything that belongs to you. So maybe you have a bag, and that bag is also belongs to you, but immediately your husband acquire you, you pay 50,000. And you also need to acquire everything belongs to you. It belongs to your husband now. And that your bag, your husband now open it and see 12,500 in it. You know that 12,500 that your husband saw in that bag is no longer your own. It's your husband's own. Because your husband already paid for your dowry of 50,000. Then if your husband want to calculate how much he paid for your dowry, it's not going to be 50,000 again, because he's already see 12,500 part of the money he used to acquire you. Do you get the logic now? He paid 50,000,
Yes, ma'am.
and the bag that belongs to you, whatever belongs to you, belongs to your husband now, because he's already acquired you. Your husband now eventually discover 12,500 in your bag. It means that he just say, thank God, I've recovered part of my money. Do you get my point now? That's the meaning.
It's clear now, sir. Thank you.
Should I move on?
Yes.
Okay. So then we can now calculate what is it called? The value for that acquisition. Okay. You can draw your purchase subsidiary.
We can't see the down part of the body. I mean, the down part of the board, rather.
This one.
Yeah, it's okay. Yeah.
Yes, I'm still typing. I want to do the work in here. Then I will now take it to that side.
All right, sir.
Okay. Purchase of what? Subsidiary. So the what's it called? The purchase consideration, the cash. You paid cash,
Or 50,000.
50,000. Cash paid, 50,000. Then net assets. Net asset. How much of the cash? As the cash.
12,000.
12,500.
12,500. Then what's the balancing figure?
So the credit side will be 50,000. Then the debit side will have 37,500.
37,500. So this is the payment for acquisition of what? Subsidiary.
So what are we calling the 37,500?
Payment for acquisition of subsidiary. Payment for acquisition of subsidiary. How much is that?
37,500.
37,500.
So it will be in jacket. 37,500 because we pay the money. What other thing that I mentioned? I said sales proceed. Is there any disposal of assets? If there is disposal of assets, then we are going to consider that part of our investing activities. But if there is no disposal of assets, then we are going to we can cast it.
Let's check now.
So you can check and let's see if there is a disposal.
Disposal.
So if there is no disposal, then
What about that thing that said disposal of dividend?
is there disposal?
Justina, where?
Anyone
Where is it?
dispose dividends, Neil? That's what I'm asking.
No, that one is proposed. That one is proposed, not
Proposed.
disposal. No. Proposed dividend. I'm talking of disposal of assets.
I get you.
Like
Sleep don't
uh,
they come. Propose dividend. I get you. All right. So there is none. There is none. That's the
okay,
only thing.
you can cast down then.
27,500.
1,001,050.
1,000,000.
001,250.
1,000,000. How is it 1,000,000? This thing is not up
Alima,
to.
you're adding. Otilo. You
What
are
the
you
law?
are already subtracting. There's supposed to be 312,500. You're already deducting it from the operating activity, right?
Yes, yes.
So IB is 312,500. So if you deduct it directly from the operating activities, what she's trying to
No,
give you.
I'm not deducting now. I want to
Uh-huh.
calculate this. You are casting only 3 for investing.
The figure is 235,000.
Is it positive or negative?
Negative.
It is
Negative.
negative.
So if it is negative, what should I say? What I say you are going to put is what? I said you should
Outflow.
put what?
Net
As
cash
net.
outflow.
Net cash outflow from
Okay,
investing.
net cash outflow from
Investing activities.
investing activities. How much do you call it?
235,000.
200 and you have to jacket it to
Yes.
35,000. Then you now move to financing. Financing activities. So under financing activities, I think I explained that one too. Like this time around, you want to finance. And if you want to finance, you can finance by say you as a company, probably there's a loan that you borrow loan to finance your business, or you acquire shares, as in you issue out shares, because this time around you want to finance your business, you can say you issue out shares.
IB,
It's
please
part
go to
of
your
it.
previous page while you're explaining.
Is it this place?
Yes, please. Thank you.
Okay, so under financing activities, it can be as a result of you want to finance your business, you don't have money, you go to bank and approach them to give you loan, meaning you borrow loan from the bank. You can be part of your financing activities, and also repayment of loan. You can also be part of your financing activities. I think we did that one yesterday as well. Finance cost is part of your financing activities, and at the same time, dividend paid. This time around, dividend paid. Dividend paid is also part of your what? Your financing activities. Are we there?
Yes.
So these are the things that you will see under your what? Your financing activities. And probably if there is a what's it called? The
Bonds, sir.
dividend paid to the dividend paid to shareholder, the dividend paid to not controlling interest, the what's it called? Finance lease obligation. So these are your financing activities. So we now check everything that I mentioned. Which one do you have? So that is way of doing it. So you have to check. Is it that you have the dividend paid to shareholder, or you have dividend paid to non-controlling interest, or there is a loan, or there is a finance lease obligation, or there is a what's it called? Commercial paper. Hello, are we there?
Yes, we are.
Yes, sir.
Yes.
Yeah.
Okay.
Sir,
So
you mentioned bond yesterday, sir.
is that what?
You mentioned bond yesterday, sir, under financing activities.
You said what?
She said you mentioned bonds yesterday under your financial
That's a long
activity.
term. That's a long-term loan. That's a long-term loan. So as a result of that, then we can now check anyone that is available, then we walk through it. So let's see. Let's think of the dividend paid. The dividend paid this time around. So what's our dividend paid? So we can see from here, there's a proposed dividend, beginning, opening balance and closing balance. And also we check maybe from our additional information, if we have similar thing like that, then we are good to go. Are we there? Should we move on? Or we call it a day?
We're almost through now. Let's finish up.
Okay. I was thinking you guys tired though.
Or you yourself, you are tired. Ogbeni, let's finish.
Yeah, I'm not tired though. If you provoke me now, after this one, I'll do another topic. So you can't talk again.
Provoke. Continue, Joe, to level.
I'm coming. Let me clean where I will draw my shots. So then we have dividend. Dividend paid. Dividend paid. So dividend paid because you are the one that is paying the dividend now. Are you getting it now? You are the one that is what? That is paying the dividend. So if it is dividend received, is an income. You understand? You put it as a what? A credit balance. But dividend paid now, it is serve as what? A debit balance because it's an expense to you. So an expenses have a what? A debit balance. But you are the one that is paying now. So what's the opening balance of the dividend? You can see proposed dividend. Opening balance is how much? Opening balance, how much? 2017. Imagine you guys have.
Hello?
Imagine. So you guys are tired.
It's
I'm not tired though.
4,500.
412,500. Or 12500. Then closing balance is how much?
475,000.
Balance carried down. 475,000. Hey.
Your battery should better not be low.
475,000. Then you now go to your P&L, your profit or loss. You look at the dividend there as well. Both you can see in your P&L. Have you seen it?
Yes, they have paid and proposed.
Yeah, there is a paid and what? Proposed. So how much is the paid?
Opening is 345.
No. In your P&L, you don't need opening. You focus on 2018.
Okay, 400,000. That's paid.
400,000. That is P or L
Yes.
for paid. P or L for paid. 400,000. Propose. For propose.
475,000.
475. 475. Then add and subtract. You can cast by adding and subtract. Then the difference will be your dividend paid to shareholder. Add and subtract to get your dividend paid to shareholder.
1,287,500.
Debit side or credit side?
Debit.
1,287,500.
287,500. 500.
500. Okay. What is the difference? 1,287,000.
812,500.
IB laptop has died.
It can be.
You know, you know that his laptop popped up and said battery low, and I said making battery no low. Now Ibrahim left. You have left. Laptop have left us.
Just sit down.
Eh?
You are the one that caused this one now.
Is it me? Didn't you see when the screen said low battery?
I'm going to do another one after this one. That's why you allow the laptop to die.
It's not me. When the thing said IB left, you did not see you have left.
Maybe you can get something to power it so that we can even finish this one. Let's see, maybe we'll have anything to power it.
Alima, please, where do we stop? Oh?
I do.
So what is the difference? Total is
812,500.
812,500.
I'm not even
So
written it up. The
one
total is how
two
much?
8,7,500. Total is 1,287,500.
I'm not write the debit. I didn't write the credit side of it. 1 million.
So your
What
debit
is
side.
What is the amount?
The debit side, balance brought forward, we have 412,500. P and
Okay.
L, we have 400. Propose, we
Okay.
have 475.
Okay.
Total, 1,287,500. 1,287,500.
Okay. The credit side.
Credit side, we now have the balancing figure, which is 812,500. Balance carried
Okay.
down 475,000.
No,
Total.
Felicia.
It's one what?
What is the total amount? The total amount.
Which total
The
amount?
total amount.
Tina.
What? What is the room number?
Hold on. When you say what's the total amount where?
Okay, IB has joined though.
Hello, let's you can see my laptop is so let's just rush it and hope you can see my screen. So the total you say 1,802,287,500. So what's the balancing figure?
812,500.
812,500. So this is the
Yes.
dividend. This is the dividend paid to the shareholder. So this is what you are taking to your cash flow. Dividend paid to the shareholder. Dividend paid to shareholder. 812,500. Then we think of dividend paid to NCI, that is non-controlling interest. The dividend paid to non-controlling interest, then we go to our question under our balance sheet, then we look at the non-controlling interest. Can you see non-controlling interest? We have opening and closing as well. Is it clear?
Yes.
Yes, sir.
So I think you can do that working, right? Or I should do that one for you as well.
I'll be
Which
doing it where we are doing it.
Please, do it for us, sir.
Dividend
Okay, it's
to
the same approach that I'm
NCI.
using now.
So 7.
So you just draw your what's it called?
Our journal, we just ledger.
Yes. So just say dividend pay to non-controlling interest. Dividend pay to NCI, non-controlling interest. Then it's an expense and it have a what? A debit balance, because you are the one paying the dividend. Balance brought forward. So what's the opening balance?
737
737,500.
500.
737,500. Then closing balance is balance
Into one.
carried down.
It's 1 to 500.
812,500. Then you check your, what's it called? Your NCI in your POL income statement. POL. You can see non-controlling
177
interest.
500. Yeah.
God bless you. How
ẹjọ
much is
bọlá
that?
tẹlẹ àwọn fígọ yín o, me I'm not seeing
Which one are you talking about? Is it dividend paid to
everything,
NCI?
gbogbo ẹ pátápátá.
What are you
Dividend pay
now
to
Let me,
saying?
NCI.
this is it now. Non-controlling interest. Opening balance, closing balance.
Okay.
Then you look at your statement of profit or loss. There's NCI here as well. You can see. I said it is 2018 that you focus. When you are picking from your POL, 172,
500. See,
500.
Are you seeing now?
yes, sojú ti là.
172,
Stalima.
Just stand,
500.
you wan pass this thing come me. You wan pass this cup, God pass.
POL 172, 500. Then you look for if there is another where you see NCI again.
NCI.
No, see, I've checked too. But
Profit
let's
after
just.
tax and NCI ló wà níbí.
Where is it?
Yeah,
Profit after tax and NCI.
NCI.
Profit
We're not using
after.
that one.
Yes, profit after tax and NCI.
It's under it. We now have paid dividends and da now. The total. So so that one is not included. If you look at the table, is the what they got. Do you get that the titled profit after? There's no more thing related to NCI. Oh, I don't know.
It's just
Let's check it properly now. It doesn't mean. So we've picked, you can see now, NCI,
NCI dividend income.
dividend. How much is that?
1,000.
Opening balance is how much? Because
40,000.
that one is opening, yes. That one having both opening and closing because it's balance sheet item. So what is the opening?
30, go back to 30,
34 to 50.
34 to 50.
So which is the balance brought forward? 34 to 50. Then balance carried down. How much is that?
40,000.
40,000. Then you can cast and look for the difference. So the difference that you are going to get will be your dividend paid to SCI.
$944,250. Debit side.
Debit side
$944,250.
944 250.
$91,750.
944 250. What's the balancing figure?
$91,750.
91
$750.
750. So this is the dividend paid to SCI. You just take it here. So you pay the dividend. You have to put it in jacket. 91 750. So you also put this one in jacket because you pay the dividend.
About to ask.
So then you can cast. Since we don't have other information regarding to what I explained.
904,250. 904,250.
Is it negative answer?
Yes.
So it now be what? Net
Cash out.
net cash outflow from financing activities. So call it again. What do you have?
904,250.
904 250. Then you can cast from the beginning, from here, followed by investing here, and followed by financing here.
97,500.
90 what?
97,500.
Is it positive or negative?
Positive.
Negative.
Positive. Okay.
Positive, that is a increase. You call it increase in what? Cash and cash equivalent.
Cash equivalent.
Increase in cash and cash equivalent. Then you say add opening balance of what? Cash and
Cash equivalent.
cash equivalents. And you now go to your question. What is the opening balance? That is the cash. The opening balance is what? 80,250. Is it clear?
How are you?
Yeah.
80,250 cash now. Cash under current assets. $80,250.
Okay.
When you add it, whatever you are going to get will be maybe
1,777.50. Do you have
cash
that?
and cash and cash equivalent
Not a balance.
at the end.
Hey,
Cash,
Washanu. Hey.
cash equivalent
Amil.
at the end. Cash and cash equivalent at the end. It must give you this at the end. It must give
3
you this
hours, no go reach for this file.
97,750.
Ọlọ́run jẹ́ kó fún wa ní direct. Direct ló máa wá.
Never
Please
got
mute
that.
yourself. Mute yourself. So this is at the end. So any questions so far? Any questions so far?
IB, I have questions, sir.
Ask your question, please, before I
The
call it
question,
a
okay, the question is somehow funny, but please just pardon me. With what you have said now, I just want to know if we see the question, what will make it different from the direct? Talking about this thing, I want to know. We see the question, what is it going to
I've
look like?
explained that one yesterday. Go and focus as in go and listen to the video. I said it is only operating activities. This is the operating activities I calculated here is different from the one I calculated yesterday. It's only operating activities calculation that will be different from the approach.
All right, sir. Thank you, sir.
So, in the absence of no further question, I wish you best of luck. And by this time, I believe that you are able to know how to post very well. That's that I used the format for you to know how to post, for you to know how to post properly.
This is what